Happy Wednesday. Happy Fed Day. It is Tackle Trading's halftime report. We are here. We are live on our YouTube channel, 12/11/2019. As always, we've got Matt and Tim and Cody back in the background doing the production here on our halftime report. Welcome out, Matt. How are you doing this morning?
Tim, doing really good. Excited to be here.
Yeah, there's quite a few companies I want to talk about here. The market's kind of in a wait and see mode on the Fed. We're going to break down all that analysis, kind of give our projections and our thoughts on what may or may not happen here at noon. I don't think a lot, but we'll get the analysis anyway. Market's doji in here as we're heading into the Fed meeting here at noon, Matt. They happen every 6 weeks, 8 times a year. We know that. They're not really volatility events the same way they were when we started trading in 2005. It used to be that when the Fed came out and made an announcement, it could fly on the market. It doesn't do that anymore, does it?
But no, it doesn't. But in 2005 through 07, when we were just kind of learning all of this and going through the process and whatnot, the Fed was going through a 2-year stretch of increasing interest rates at the top of the market, right? They had maximized employment and they were raising rates. They went from what was it, a 2% interest rate to about a 5.5%. Excuse me, it was a 1% interest rate to a 5.5% interest rate. So obviously that's going to have a bigger market impact when the Fed's going through that. And then, obviously coming into 08, we started seeing the market volatility, and the Fed, was very, very aggressive. Whether you agree or disagree with what they did, they were very aggressive in their monetary policy at the time, going from a 5.5% interest down to ZIRP, zero interest rate policy. And then they announced quantitative easing. I mean, literally in the first 3 years of our career as traders and whatnot, we went through a rising interest rate environment followed by one of the worst economic conditions that we've ever seen. And the Fed was extremely aggressive in all of that. So obviously it had a much bigger impact since, really, honestly, Tim, since quantitative easing infinity. Most of the time we've kind of known what to expect out of the Fed coming into a Fed meeting. I mean, I don't know what the poll numbers are at the CME group right now, but it's got to be close to 99% of the entire market thinking that the Fed's not going to do anything today. So we really kind of already know what the Fed's going to do. They've been fairly transparent over the last 10 years, not so much over the last 3 months, but fairly transparent over the last 10 years. So for the most part, these Fed days, there's a lot of pomp and circumstance and hype around these events, but a lot of times they just come and go, and that's kind of what we're seeing here today. Just kind of a wait and see approach, based on not only what the Fed is doing, but trade policy. And we have the December 15th date that we still, which is quickly approaching on Sunday, that we still don't know exactly. We expect them to delay the tariffs, but we don't know that for certain. So I think the market's just kind of in a stall mode as it's sitting right underneath resistance.
Yeah, in fact, Larry Kudlow came out yesterday and said the tariffs are still on the table for the 15th. I mean, I know that might be posturing and all that kind of stuff, and who knows what they're discussing on the back channels, but it's another indicator that this deal's not done, Matt. And I wonder what the Fed is going to.
So phase one, 60% of the deal that we're still discussing 7 weeks after it was announced, it's still not done?
No, it's not done.
No. The deal's never going to be done.
I don't know if it will ever be done either. In fact, I think it was very telling what Trump said a week ago, where he said maybe the best thing to do is to wait until after the election. He might postpone this and use it as kind of a negotiating tool or political fodder for the next year or so. Who knows?
And I can't say that I disagree with it. That might be good strategy. We'll see how it plays out.
Yeah. Many things I want to go through here on the markets today. A lot of them are individual stocks. So give me a quick flash here on the S&P, the Dow, the NASDAQ, and the Russell. I think the one index of note here today is going to be the Dow, because you have individual company news on Boeing and Home Depot and Chevron, which are all Dow components and dragging the Dow down. Matt, give me a quick technical read on them if you can.
Yeah, looking at the market here, you obviously have a resistance level right there at 31.58. A breakout of that is obviously tradable, but nothing underneath that. You kind of wait and see how that market's going to respond, coming out of the Fed today, and obviously some of the other central banks tomorrow with the ECB. And then you obviously have, coming into Friday we probably will see some volatility on Friday if we don't get any news regarding what's going to happen with the tariffs come on Sunday, December 15th. Breaking this down from an intraday perspective very quickly, you just got a lot of chop, Tim. That's all this is. It looks volatile. It's not. It's just a lot of chop here. You're obviously right underneath these overhead resistance at 31.58. So I think the entire market is just in this wait see type approach, waiting to see what the Fed doesn't do, but what the Fed says. I mean, this is their last, Fed meeting of 2019. And like I said on Monday, the one thing that I think the market is looking at, and the one thing I'm looking at, is does the message change, right? Does the message change with where we're at from an unemployment? Because we had a really good unemployment report last what was it, a week and a half ago now?
Yeah, no, last Friday. Yeah, it was
Yeah,
great.
last Friday. It was
3.5%,
really
record
good.
low unemployment, man. Yeah.
Well, and it wasn't just that, Tim. They revised the other unemployment reports for the last couple months as well to the positive. So, where unemployment is right now, and the labor market being extremely strong, and the economy in the U.S. not doing nearly as bad as, say, the economies around the world, including Germany, China, and Japan. It's going to be interesting to see what the Fed does from a monetary policy. So I think we're just in this wait and see approach to see, number one, does the Fed indicate anything about monetary policy in 2020? I mean, in the last few years, Tim, we came into these years with some pretty decent expectations. We were expecting 3 to 4 interest rate hikes in 2018. We got 3. We were expecting, coming out of, the December 24th plunge protection team type situation from December of 18. We kind of knew what the Fed was going to do in terms of lowering the interest rate coming into 2019. So is the Fed going to indicate, very similar to what they did last December, what their monetary plans are for 2020? That's number one. And then obviously we're just waiting on the tariff decision on this coming in later this week as well. So you're just kind of waiting on those two things. Looking at the NASDAQ here, nothing really changes on the NASDAQ versus the S&P. You're looking at a very similar technical pattern. Obviously resistance a little higher over here at 84.58. So keep an eye on that as well. We were talking about the Dow, Tim, and the Dow's just doing the exact same thing that the market's doing, but it's lagging a little bit today. And a lot of that is probably the Boeing news.
Yeah, Boeing, Home Depot, and also Chevron. I mean, you have 3 different companies, components on the Dow that I think are very important. Might as well talk about them right now, Matt. Boeing is it's troubling news. There's no question about it. The other ones are market news. They're just economics. It's about projecting sales and all that kind of stuff. But there's a whistleblower on Capitol Hill today giving testimony, Matt, and he's not saying very positive things about this company.
No, like they knew after the first plane crash that the planes were going to go down.
Yeah.
And yet they were still putting those birds in the air.
Yeah.
Disgusting.
It is disgusting. And
people's heads should roll. People should be fired, and there should be criminal investigations.
I agree. I'm going to obviously let all of that play out on the Hill and kind of watch it and digest it. But my opinion about this company is getting worse and worse and worse the more information that does come out about it. Not only that, though, and I've got to dig into this story because the FAA might have known about that as well, man, not just Boeing internally. In fact, there was a report that maybe the FAA had some knowledge that there was risk that plane would go down after the first crash as well. I mean, what is going on here? I understand the need for capitalism. We live in America and all that kind of stuff. It's crazy.
Profit above human casualty. It's just it's an insane story. I'm not surprised. I kind of felt after the first plane and then the second plane that there were some shenanigans going on. The whistleblower, in fact, Tim, there was a report that the whistleblower is going to basically after that first, no, it was before the first plane went down, I believe, that he made a statement that he was not safe putting his family on any Boeing plane, not just the 737 MAX, but any Boeing plane. This is when you lose the confidence of the public, and I'm not sure Boeing's going to do that. We'll see, but it's just it's a sad story getting worse.
I think from a markets perspective, I think it's going to delay whatever they're going to do with recertification on the 737. I know that they were trying to get that up and running again, and that was going to help them with their sales. Matt, that might be pushed way down the line. I mean, one of the things that can play out here, the FAA does not want to have a public fight about this with Boeing and be thrown under the bus. And I'm sure that's going to end up delaying some of this. It's a complete stay away from me. We've been saying it all year long. I don't even know. In fact, I asked Coach Frank this last week. What would have to happen for you to get interested in buying Boeing again?
Well, and just to give a little bit of historical just connotation here, we're talking about one of the most trusted, just well-respected just American brand type companies that everybody loves. That has been one of the best performing stocks in the last 10 years. That was one of the most consistent stocks throughout, 2016 coming into 2017, was on fire coming into early 19, and then just mistake after mistake after mistake, not try, they're obviously not being transparent in what's going on. And now we're talking about losing confidence in this company, and it's because of them putting greed above the human perspective.
Yeah,
It's just a sad story.
it
So
is.
what would have to happen for me to get back interested in Boeing? The CEO would have to be fired. That'd have to be number one.
New
There would have to
leadership.
be, there would have to be change on the board of directors. I don't listen. Maybe the CEO knew about it. Maybe the CEO didn't, but he is the head of the company. Everything goes to the top, to the head of the company. And when you have something like this, you would have to have a change in leadership for me.
Yeah. I'm with Daniel. I don't know if anything does, I mean, sometimes when you write a company off, I'm just like, I'm done with it. I don't support what they're doing. Although you never say never.
Even with the change in leadership at the top, even with the change on the board, even with, even if they did all of that, I still would be,
I'm still going to have to wrap my head around it. There's no question. A couple other companies on the Dow, talk about them right now. Chevron, actually, this is a big deal in my opinion. CVX, they wrote off. Now the chart's not really responding to it, Matt, but they wrote off $11 billion worth of assets. Obviously, the end of the year, this is some tax stuff, but it did highlight some of the problems that the company is having in their shale production, their deep water drilling production, what they see for prices for natural gas. We'll get into that here in just a minute. For a company that's 200-300 billion in size, writing off $11 billion, only about 5% of their size. But I thought that was significant. Obviously not performing well. What do you see in the chart here, Matt, from a price action standpoint?
I mean, down about 1% on the news. I think the market's not pricing in that risk. I think that does lead to a little bit more risk here. Chevron, I'm not seeing anything worth of note to say I want to invest, I don't want to invest, or this is a trade. It's really just kind of stuck in mud, kind of like oil has. When you're dealing with stocks like ExxonMobil and Chevron and the drill baby drillers, they're going to perform much more similar to what oil's doing than their own earnings reports, because they're driven by oil in the spot price of oil. So when you're talking about Chevron here down 1% on the news, yeah, that's of note, but you're also down 1% on crude oil today. So I see that more in line with what's crude's doing than based on what the report we saw today on the $11 billion write-off. Companies write off assets. They do. They rebalance books at the end of the year. So maybe there's a little bit of smoke here, but I think Chevron's down more based on oil today and the draw we saw in the oil inventory report than the individual news.
Yeah, let's bring up crude oil if you can, because I do think that draw, obviously, I mean, we're down 0.62%. The oil inventories report on Wednesdays has been one that we've comically kind of made fun of the last year and a half, Matt. It hasn't made a big impact. When you get a shock number, usually the market will move. Crude oil is not moving here on that event either. I don't see a difference in the way I would rate this chart. You're still above the short-term moving averages and below 60. Still a 0 to a +1, maybe like a 40-yard line for me.
What's
your
a 40-yard marker? Yeah. It's whenever you're dealing with the short-term uptrend in an intermediate neutral trend, which is what crude is doing, and you're hitting up against resistance in a high base, and you're kind of anticipating a little bit of a breakout, that's 40-yard marker, with the breakout would move it into the 30.
Yeah, I think so as well. Natural gas, which was mentioned in the Chevron report as to why they were writing down some of their assets because of natural gas prices down at the bottom. It is backfilling here, Matt, and I just keep looking at the chart, staring at it, doing nothing different yet, because as long as it closes above 220, my plan was to stay. But I'm seeing a bear flag develop a little bit, or a bearish retracement back into the gap point. Is that a bearish chart and I'm just seeing it with my bias? I'm asking that every day, literally every day, to anybody who will answer that damn question.
Don't worry about that $2 credit spread you have. No, I don't think it's a bearish chart. I think it's a neutral chart. I think you're very similar to what you have on oil, just the opposite approach. You do have a short-term bearish downtrend. You can't deny that. This is a lower high. That is a lower low. That is a lower high. And then obviously the gap comes down into support. So yes, you do have that short-term bearish downtrend in an overall, type of sideways neutrality between 2.2 and 2.8 right now. So with where you're at, yeah, you would be a negative 40 here. What you're seeing on this price action right here on natural gas, that will come in a little tighter, is you're seeing a couple things play out. Number one, the gap is trying to be filled, and yes, it is forming a bear flag on the short term. So the projection would have to be slightly bearish, I would say, but that doesn't mean 2.2 gets blown out of the water, right?
Yeah.
You're seeing slowing momentum on the gap. The market responded pretty decent on the gap coming off support. You're not seeing, any type of, aggressive buying or selling here. So obviously we could see some neutrality play out. And I still believe you do have seasonality pressure, even though the last 2-3 weeks hasn't seen that play out.
We're getting strong price action across all the metals. Platinum is up 2%. Palladium's up another 1%, hitting another all-time high. Copper's up 1%, actually breaking out and showing me a lot of strength. There's some complexity in these charts, but even gold coming back up off the bottom now, kind of forming and solidifying that support. That's a juggernaut.
Every time I look at palladium, I just love, wow.
Yeah.
Wow. Every time I pull up this chart, I just think, how many times I've analyzed this and didn't pull the trigger on it.
Dude, I get that part of it, but it's my favorite chart.
And I know that's what traders do. I get that, right? We analyze so many things, and you can't keep your eyes on everything, and you're going to miss opportunities, and and you can't get into the would-haves and could-haves and should-haves and all of this. But sometimes I look back, I'm like, that was a really good trigger that I either just didn't pull or just missed completely. And now you're overextended on palladium, but again, I'm looking for every high base on palladium, and I'm looking for every, bullish flag or bullish retracement on palladium right now. I'm not going to chase it, even though it's up 1% every time we look at it, but I am going to wait for it to set up again. Dude,
the algos, I believe, are running this thing, and I don't think I'm way out of school talking about that. Gold is finding support and holding. I'm on record saying I love a trigger above 1,500. Any kind of confirmation above those moving averages. I think the short-term price action here is not there yet. Grant, I was talking to Grant Larson last night on the Coaches Show, Matt. He said he would wait till 1,520, because he would want confirmation above the pivots back there from perspective. Where do you see some upside potential here?
Well, it's got to get above the 50-day moving average. I mean, that at a very minimum, it's got to get above the 50-day moving average. You're seeing the 50-day moving average play a role here. You're seeing it obviously play a role there. It played a role over here as well. And so it's got to reclaim those moving averages. That's number one. And then you start talking about return versus risk above, say you're triggering above 1486 and you have your first target at 1500. Can you frame a swing trade that makes sense from a return versus risk ratio and a probability? I'm not sure. I mean, if you go above 15, you got it 1520. If you go above 1520, you got it at 1540. If you go above 1540, you got above 1566. That's the difficult part when you're dealing with a short-term bearish downtrend in an overall bullish uptrend, is finding where that trigger is. And aggressive traders, they could pull the trigger. Excuse me. Those aggressive traders could certainly pull the trigger above this pivot point. There's no doubt about that. A little bit more conservative a trader waits till 1500. And for me, with Grant, saying above 1520, the most likely scenario, if that does happen, is it's going to high base and then break 1520. So it's just a matter of understanding you as the trader, you as the investor, from an aggressive versus a conservative standpoint on triggering.
One of my favorite parts about the step system. And by the way, if you're out there, you're watching our show right now, there's a couple things that just grab my attention. I got to point them out. We've got over 60 people here live, but only 20 thumbs up, guys. That's a really, really bad relationship. I got to get that.
That's a bullish pendant. That's a flag. That's not a retracement. We always try to target retracements here.
I need 50 to 62% here, Matt. The only time I ever believe in Fibonacci is when I'm asking for thumbs up on the halftime report. It's the only time I ever reference it.
I don't like those 62% retracements.
They're not my favorite. Yeah, they're not my favorite.
38% retracements. I love 38% retracements.
And then other thing,
that's the Goldilocks, right? 38 to 50% is the Goldilocks.
No, just candle price action. You don't need to put a fib on a chart to know where the retracement should come into it. If it's so naturally built in bound.
Says the guy who says there's value in the VIX.
Hey,
yeah, you're right.
We don't have time for that today.
Hold on. Don't need to look at the VIX to know what the VIX is doing if you understand the S&P.
It's a long conversation I am going to punt on. We can talk about that on the podcast another time. But the other thing I was going to say is, Matt, what you're talking about here is three different forms of triggering. That's one of my favorite parts about the STEP system, is that as you go through those modules as the educator, and as we write it in the blogs and we actually create that course, we're teaching people how to aggressively, moderately, or conservatively trigger on almost every setup. This would be a breakout triggering setup. That's going to be session and module number 5 in the STEP system.
Can I tell you what I would like to see on gold for me to trigger in? I probably wouldn't trigger on any of those breakouts. I mean, in maybe the 15, 21, if you have a high base. But when you're triggering on a breakout, according to the STEP system, you got to look left to the chart, right? And that's what I was talking about with I don't know if you can, create a proper return versus risk ratio with where you need to place your stop losses, because if you break above 1486, 1487, you only got 13 points into that next target at 1500. And if you're targeting anything above 1500 on gold, you're making a more aggressive targeting than I would.
I'll counterpoint that.
Yeah, go ahead.
I'll counterpoint that. I don't think the daily chart is where I'd build my plan from. It'd be the weekly chart. And on the weekly chart, if you look at it, that flag, it does change my analysis for it, because that shows me the relationship. This is more like a consolidation or a flag on the weekly. So an upside breakout, I'm not going to target the resistance.
Okay, but we're talking different trading styles, though. I'm talking swing trading on a day chart trigger, and you're talking about a position trade, right? And a position trade above 1500 with a stop loss underneath, find a support level you're comfortable with. Yeah, you can. That makes sense on the weekly chart. What I'm talking about is what I would need to trigger into something a little bit more aggressive. I would need the breakout of 1500, number one. Okay, and then I would need the retest of 1500. So, and what I mean by the retest is, say you get the breakout of 1500, it flies into 1520, high base, flag base pattern, retracement, retest that 1500, make sure 1500 holds, and then I think you got a better trigger on that.
There's a learning opportunity here if you're a new or kind of been around the markets just for a year or two. Guys, traders who've been doing this for a long time, we trade the same products over and over and over again. We plan our trade well in advance. Then we trade our plan once we have that fit and sit, Matt. I mean, gold may not break out of any of those levels, any of this discussion we're talking about, who knows when. But when it does happen, because it's a product that we look at every day, we know very well, and it's one of the major products in the market, we can just execute.
When I'm saying this is what I need, right?
That's right.
Give me this, right? I'm not begging the chart to do something. I'm basically stating what I would need to execute my trading plan.
Yeah, no, I'm with you. Give me a quick look at the dollar here, and we're actually going to spend just a minute or two on this and talk about just Fed expectations. Obviously, the chart is neutral, in my opinion. I can't even make any kind of bullish case. I don't care what weekly chart you're looking at or any of that kind of stuff. I know that maybe a weekly time frame trader might say there's a casual uptrend over the course of 3 years or whatever it is. It's holding on to that, but you're also losing momentum, and you might even have a funky head and shoulders in there developing. Obviously, heading into a Fed meeting, dollar down, Matt. What does that tell you about what the market thinks about the Fed here?
I'm not sure to be 100% on that, because there's other economic conditions that's going on around the world that could have an impact on the dollar, including the Swiss National Bank announcing monetary policy. The dollar's not moving aggressively right now. It's, and what I mean by that, in terms of the Fed, when you're looking at the dollar here, the dollar's just retesting support from an intraday perspective. I think, and what are we down? We're down on the day about
hardly nothing. Yeah.
I mean, practically nothing. I mean, so I think the dollar, more than anything else, more than the S&P, Tim, the dollar's waiting on the Fed. The dollar is the thing that moves the quickest on the Fed. And, on these types of Fed days, there are aggressive currency trades that are really, really popular if we do start to see some price movement on the Fed. And when you're talking about trading economic events from a day trader's perspective, it really starts with understanding how the market responds to what the announcement is on the Fed, and then what the Fed says in their presser after that.
All right, I'll role play with you.
Okay, go ahead.
So I'm Jerome Powell.
Okay.
I'm doing the press conference.
Okay.
I come out, and after the announcement, we have a unanimous decision, no dissent in the Fed. So none of this, one of the Fed chairmen from a regional bank is arguing that we shouldn't have done it. We did not raise interest rates. We did not lower interest rates. We stand at pat. And then as Jerome Powell, I come up in front of the cameras and say, listen, we've reevaluated the economic conditions and we're going to continue to be data driven in the future, but we do not expect a single interest rate cut in 2020.
No interest rate cuts?
None. Not wait until June. That at 3.5% unemployment, we were more concerned about inflation with the employment market so strong that we should have been. The data has spoken. We're willing to keep interest rates where they are, and we are not cutting rates further. What if they said that very firmly, very
Dollar
directly?
response bullish.
Probably, right?
Yeah, dollar response bullish. Decreasing interest rates, increasing money supply, valuations go down. Right? It's that simple. Okay.
Yeah.
Increasing supply, values go down. Increasing demand, values go up. Decreasing supply, value goes up. So if the Fed comes out and says we're going to stand pat, we're not going to do anything, we're not going to lower rates when the market wants lowered rates, dollar goes up, market goes down.
It's going to be interesting because I'm getting this sneaky feeling from the Fed
I don't
recently.
expect a unanimous decision here.
I don't either. That might be the most shocking part of what that role play was, by the way, is if you had all the Fed governors say the same thing. I don't think that's going to happen. I think there's three things I'm looking for. Their 2020 projections, whether or not they do, and how they vote from a Fed governor perspective. Are they unanimous? Are they not? Are they split? Who splits off and has a dissenting vote? And what do they say about the jobs market, Matt? Because they said we can't sustain inflation. We can't contain it when the unemployment rate's down this low. I don't know if that's true or not. They've maintained inflation where it needs to be, and the jobs market is as strong as it's ever been. So there are some things I'm going to be watching for. And it feels like the Fed wants to come out and basically be strong again and kind of have this big bravado again.
To truly fix inflation and not just use the inflationary argument to justify their bad decisions, then you need to look at the imbalance of money supply between who has it and who doesn't. When you have 97% of the money supply being controlled by 3% of the population, with the vast majority of that being the top elite 1% of the environment, you don't have velocity of money. And if there's one thing that I think we've lost the economic belief in, which I feel is wrong, is the velocity of money, how money is utilized through our economic system. So if they truly did want to fix inflation, get money working in our economic system. And to get money working in our economic system, you have to have workers being paid more than what it costs to live. And right now, the projection is about 40% of the American labor force, even when they have a job, they only make what it costs to live. And then 70% of the labor force does not make enough money to even cover short-term increases in cost. And when you have an economic environment where the money supply is controlled by such an elite few, it creates a lack of velocity, which impacts your GDP, it impacts the valuation, and it impacts inflation.
Yeah. No, I'm with you. It's going to be interesting. By the way, I probably will not be watching Jerome Powell's testimony. Sometimes I turn them on, Matt. Most of the time I just watch the price action on the markets, because to me, that's what's more important until 2:00. And then after the bell, I'll go back and read the testimony or review it and read the Fed statement. That's kind of how I approach it around that 2:00 Eastern time frame.
Yeah, but I geek out more on that stuff than you do.
Yeah. And I always read them later. Don't get me wrong. It's just when the markets are moving, I'm usually just on the intraday chart. Some companies I want to talk about before we get into our game here today. Cody's got a trivia game for us, which on Wednesdays, we've been having a lot of fun on the halftime report. We did clown shoes. We've had other segments, and I'm interested in this trivia game here, Cody, that you've got planned for us.
Anything based on his logo game, I'm not interested in it.
Yeah, that logo game.
Hey, that's not my fault. Y'all don't recognize logos.
All I said to Cody in the pre-production show, I'm like, Cody, are you gonna make us look like clown shoes again? Like,
it's true. We were the clowns that week.
We were the clowns that week.
That's right. Disney, Matt, I saw another positive report out of Disney. It seems like every day this company is in the news, which is usually what creates just investor interest. There's no question about it. They had 22 million downloads on their mobile device on their Disney Plus. So not only is that product flying off the shelf for people who are on their smart TVs and Rokus and all that kind of stuff, but on mobile, people are using it. Just another indicator this company is such a strong company.
I don't know. Let me put it like this. I don't know what the expectation for Disney's downloads were or their subscriber growth was. I know it took many years for Amazon to get to 100 million Prime subscribers, and the same thing with Netflix. So I have no clue if that's a good number or bad, because when you see most economic numbers, you see, okay, we have an expectation of an unemployment rate coming in at 3.6. It comes in at 3.5. Everybody celebrates it, right? You have a standard that you really kind of judge the barometer from. So I don't know if that is a great number, a bad number, an awesome number, the most amazing number. I'm just going to tell you, to me, it's impressive.
I think
right?
it's impressive too.
Yeah,
I do too.
within the first week, they had 10 million subscribers on Disney Plus. Now, what was it? What they launched? We're into this about a month now.
Yeah, they brought it out in November.
Downloads.
I still haven't watched The Mandalorian, by the way. I still need to see that baby Yoda. I mean, apparently it's the cutest thing on the planet. Have you seen it?
I have not seen The Mandalorian. I will watch it, but I have not seen it yet.
Yeah. I mean, I have a lot of interest in the product. My wife loves the product already. My girls are already obsessed with it. There's no question about it. I get it. It's another good positive story for a company we've been tracking.
My daughter watches it.
Yeah. Yeah. Tesla, TSLA, Matt, another story out of Tesla talking about their assumed production.
You're just gonna get me interested in this company.
You have to, Matt. They're talking about how they are going to put out another 500,000 cars a year through their Gigafactory. They think that production is going to be much more efficient. Another positive story.
The last couple things.
It's been impressive the last 5 straight trading days. And if you look at that, we're now at a pivot point at 360. This thing is bullish. Whether we play it or not, that's a trader's discretion, but it is a bullish company in the last several months. And I don't think I'm exactly pointing out the obvious, Matt. Stock's gone from 250 to 350, but we're pushing up against multi-year resistance. Do you think we're got an opportunity here on the bull side? Let's say somebody out there is a Tesla guy. They don't have a problem with what Elon did. They don't see the same risks we do. Is there bullish opportunity in 2020 if Tesla can break out?
Obviously, yes. Obviously, yes. The problem with this kind of goes back to, where do you trigger?
Mm-hmm.
Do you trigger above, 365? Do you trigger? I think you got to wait for a breakout of 390 at this point.
Yeah, I still probably wouldn't.
I just don't think you have the upside anymore.
No,
not when Tesla has a tremendous amount of history between 360 and 380 of stopping and just getting smoked.
I just wouldn't chase it. I mean, to me, there are better ways for me to map a trade out and feel confident about using a system and applying it. There's complexity in the chart. You've got noise on the left of that chart, and I don't like noise on the left of the chart. I like easy trades that I don't have to.
Triggers.
Yeah, for sure. Yeah,
easy
that's just
triggers.
me. That's the way I would approach it personally.
I kind of see it like Tesla between 14, 15, and 16. Tesla was just kind of neutral, but in a very wide range, right? You're talking between 185 and 280, right? 285. So, it's got a 100-point range. That's about what would that be? About a 30%, 40% range of neutrality. That's what you kind of have here as well, just a bunch of neutrality. But once, and I'm going to come into this right here, once you kind of hit into this resistance level, and then watch that weekly retracement, and then it runs from a shorter distance. And that's what I'm talking about here, Tim. Is it's tough to trade that as you're approaching those all-time resistance. Wait for that retracement. The RSI comes down a little bit. It gives you a much cleaner channel on the upside. And once you finally broke out of that 280, 285 level, you went up another 100 points out of that in the next 4 months, Tim. And so when you're looking at it here, probably, overextended, obviously, with the RSI at close to 80 now. You're overextended on the chart. You're coming into these major resistance areas. I would love to see it. I would get interested in Tesla again. I know we make fun of it, and I do disagree with what Elon's done since last August, but this is a company that I was extremely interested in for many, many years before August 7th. And that's why one of the reasons I was so upset with what Elon did is because I hate stock manipulators, Tim. It's the one thing that drives me more crazy than anything else. And I said this back on the day when Elon did it. I said, if Jamie Dimon did it, we'd rip him. And if Elon's going to do it, we're going to rip him too, because we don't like stock manipulators. We're capitalists. We're free market people. And we want to have price action be driven through supply and demand, not based on manipulation. So if you're going to rip the Fed for manipulating, if you're going to rip Jamie Dimon for manipulating in the gold markets for the last 10 years, you got to say the same thing about Elon Musk when he basically stated he had a buyer from Saudi Arabia at $420 on, what was it, August 8th or August 9th of 2018. And so that's really kind of, why what really got me upset, but I can overcome that. But it really kind of starts with that breakout of 390. You could see a similar price action that you saw in the last breakout. 500, if you break out at 390, 500 is not that far.
You got a buyout price at 420, Elon. Pretty transparent right there in that comment.
Yeah, well, that's the thing. It was like, okay, we obviously know you're high, and it was a joke, and then you just got stuck on it, and you never came off it. Just be transparent and honest.
He's a funky billionaire. There's no question about it. I want to talk about some more companies though. Give me SMH, the semiconductor holders, Matt. And actually, when I looked at the heat map this morning, semis were running. And then after we quickly look at SMH, just kind of note and the SOX index is great too. Then go to AMAT, which is a tackle 25 stock, and one that I actually really like. When semis are running in front of the Fed, that tells me very, very strong. Matt, breakout there is in play. Give me
semis are running. It's one of the most bullish indicators.
I think it's great. Yeah, it's a really good sign for the bulls and confirmation there. And then I'm looking at some of our companies. I'm like, okay, where's my tackle 25 semiconductor stocks? And AMAT coming off that deep retracement, now volume, confirmation, volatility, Matt. That's a beautiful chart. Analyze that one for me if you can.
Yeah, you got potential swing trades. I like Applied Materials from a position trade. It's a very, very consistent trend. Tim, I was breaking down the tackle 25 yesterday. Spent about 7 hours analyzing a lot of stocks, both from a technical, fundamental, liquidity perspective. Including going through the tackle 25 to identify which ones are going to stay and which ones are going to go. And I got to Applied Materials, Tim, and I'm like, nope, there's no analysis. Mm-hmm. This is just here. And one quick takeaway from that, guys, and I'm telling you, I looked at I'd say I analyzed about 500 stocks yesterday across the board. Now, I didn't get through every sector, but I did get through quite a bit of sectors, Tim. And I got something to ask you. I went through energy, materials, industrial, consumer discretionary, staples, healthcare, and finance so far. So I'm about 60% of the way done through the market. When I'm looking at the market index, that is a very consistent trend, correct?
Mm-hmm. Yeah.
Very bullish trend, correct?
Yeah.
I would say 70% of everything I analyzed yesterday was complete garbage.
We're in a top-heavy market.
Complete, utter garbage.
Mm-hmm.
And even in the stocks that weren't garbage, big-time bearish downtrends, most of them neutral for 2 years.
Mm-hmm. Mm-hmm.
Only relatively handful of stocks were in consistent, really good bullish environments. And yet this market has done nothing but go up and up and up and up. And I guess I've said this before, the indexes are not a true representation of the entire stock market because the indexes are so weighted towards a certain few stocks, correct?
That's right.
Yeah, that's why it's either, dollar cost average in an index or you're a stock picker, I guess.
Well, let me do a quick little scan here. If I click on the S&P 500 and I look at performance year to date, let me give you an idea on even some of the bigger companies that have done great. AMD, they're up 113% year to date. Target, big company, up 90% year to date. It's a top heavy market, Matt. Apple Computers up 70% year to date.
That's my point.
Apple Computers at 70%. I mean, when the biggest company in the world is moving like that, yeah, I mean, it's a top heavy market. I think that's absolutely a good point. Yeah. Other companies, Matt, though, that AMAT, I do think the position trade, by the way, is a good play there. And you could even consider covered call here, in my opinion. We have the tackle. In fact, in the chat here, guys, just to help me promote an event we're doing here tonight, type in tackle 25. And we have a mastermind group tonight. Coach Greg Holmes, who is one of my covered call traders, a great coach over there at Tackle Trading, does the rookie blog. He'll be analyzing how to do those covered calls and how to read them, and an update on the Tackle 25 here tonight, 8:30 p.m. Eastern Standard Time. But I like AMAT here for a cover call. I actually think that would be a good way to play it potentially. One to even.
AMAT is such a good company.
Yeah.
It's fundamentally strong, technically strong. It's AMD is my favorite semiconductor.
Mm-hmm.
Applied Materials, though, in a different area of the semiconductor, but this is second for me.
Leadership in the market. Netflix is looking pretty good here today, bouncing back after that gap down and the downgrade. They're having a little bit of upside. when I was looking at them. Still can't get above that MA. To trigger anything, you'd have to get above that 9 and the 20. Alibaba hits my top of my scanning list every day, Matt. I've been seeing this company coming up on my scans and my screeners over and over and over again. That's a high base breakout right there.
Oh, absolutely. 100%. Yeah. I mean, you could give it a high base. You could give it a little bit of a pennant type pattern, a little bit of a triangle. But regardless of whatever you want to call that, that's a legit breakout. Now, has it confirmed on this? Let's go ahead and look at that hour chart here very quickly. You got that overhead tick at 204.80. And these are discussions we have in the scouting report meeting every Friday when we're talking about where to trigger. We look at kind of that intraday and we see, okay, we got a tremendous amount of evidence right there at about 203.30. You got that one tick at 204. That looked like a volatile type of situation on a Friday. I'm not going to worry about that one tick. I think you got a clean breakout above 203. We'll just call it 203.40. If you can close above 203.40, it's a breakout.
Bob is on my watch list looking pretty strong. Freeport-McMoRan, FCX. You know, when we were looking at copper prices earlier, first company I thought about is go look at Freeport-Mac. And Freeport-Mac is flying here. I think you might have missed it in the short term. I usually don't play this as a swing trade, though. I usually position trade this one because I love the dividend, the cover calls, though kind of thing on it, Matt. Pretty good looking chart, though.
Copper's recovering a little bit.
Yep, I agree with that. Earnings tonight after the close, Lululemon, just be aware of it. If you're a trader, obviously you got to always look up your earnings. Sienna tomorrow, and then tomorrow, Cody, remind me to go through some earnings reports and some preparation because Costco, Broadcom, Adobe, and Oracle all report tomorrow after the bell. Actually, a few pretty important companies right there of size and note. But really, I'm looking at the clock, thinking about all these things we've got covered here today. I think it's time for our game. Unless we just lost Cody. Did he literally just bounce out? So I pitch it to him and he disconnects. Is that a sign, Matt?
Nope. He's done.
Yeah.
That's fine.
That is pretty funny,
So
actually.
what was that game anyways? That game,
It was a quiz game.
It was a quiz game.
It's a quiz game, and he might be just going back and coming back. And by the way, while he's doing that, we'll see if he comes back in here shortly. I'll tell you, there's a couple of companies off of the reports today that were looking really, really good. Look at Lyft. You know, we've been analyzing this company on the halftime report here for a couple months. We've been talking about the reversal characteristics. We reviewed its earnings report. Pullback, pivot, trigger, confirmation on volume. No volume there, but size of the candle's pretty good here, Matt. That's a pretty good setup.
Yeah, it was something obviously that was caught our eye and we've been looking at it and we've been talking about this potential reversal, and it's not a reversal anymore, Tim. You've got a short-term bullish uptrend now.
Yeah.
I mean, and you got a pretty clear short-term bullish uptrend. You got a higher high, higher low, higher high, higher low. You're hugging the moving averages. That's a pretty clear uptrend, and it should be on people's watch list.
You know, by Wednesday, most weeks, Matt, we usually don't get this many companies that have not triggered yet. A lot of times we're going to get 4 or 5 companies on the bull option report that have already triggered by a Wednesday. Actually, one great thing about that report today is that you could go in, you could review it today, and there's so many setups that are still legitimate and ready to roll.
A lot of those are high base breakout type scenarios too, Tim.
Yep.
Where you break out of those bases, you can't tell the market when it wants to move. You can't be the chart whisperer. You're gonna be like break out on a Monday. It's gonna break out when it wants to break out. You got to be prepared for it. So yeah, I mean, I was going through the options report earlier today, Tim, and there were 3 or 4 that caught my eye on a potential breakout, especially if we get some positive news out of the Fed and the market responds bullish.
We'll wait and see how, and same thing on the downside, by the way. You know, there's some bear setups that I'm interested in as well. If the market responds in the negative, I'm going to jump on a few of them as well. Cody, you're back. I don't know if I even want to play this quiz game because I'm a little bit intimidated by it, but I love games.
By the way, I do have Lyft. I do have Lyft as a dirty, sexy money potential.
It's one I love for that list for sure.
Oh, I'm listen, one last thing, because I saw it in the chat yesterday. There was a couple people that said, find us those cheap, dirty, good stocks, right? And so I spent quite a bit of time yesterday scanning the markets, finding some of those undervalued, potential double bottom type scenario companies that we could do covered calls on. So I'm getting excited for the dirty, sexy money list that's going to come out with the Tackle 25.
DSM list going to be 10 again?
Yeah, I think we're going to limit both the three lists, the dividend fireworks, poor boy covered call, and DSM to 10, because we could put 20 on there, but let's find the 10, right? Let's make those tough decisions. Tackle 25 is obviously going to stay 25.
I love it. I'm excited about it. I'm excited about the whole
One
thing.
thing I've been thinking about doing, though, T, is coming back to creating another Tackle 25 stock that only has ETFs that are liquid enough that you could do covered calls on as well. We did that once in the past. We used to have ETFs, just a couple of them on the actual Tackle 25, but we typically make that just a stock list.
Yeah, it's a good idea. I mean, by the way, I mean, a lot of the same ones will be there. Gold, silver, USO, all that kind of stuff. But there's some new updated ones as well. And we could always go in and evaluate it and take a look at it for sure. Bring that ETF list back. I'm just excited about the whole process, quite frankly, Matt. Going through the research. I know you've got to jump on it. You've actually been putting quite a bit of time into looking at fundamentals. It's a different hat that you have to wear.
Oh my God.
Combining fundamentals and technicals.
At 8:00 last night, my eyes were red. And I just went into my wife and I said, give me something to do because I can't look at another data point.
I love it though. That's exciting.
I'm the type of guy that has a hard time just sitting down.
Sure.
Give me something to do.
Yeah. No, I'm with you. By the way, Cody, are we going to play this game, kid? Because I'm excited to either win or lose another one. Have some fun with it. We
filibustered ourselves for 10 minutes, Cody.
Hey, I know, and I appreciate the filibuster, but you know, if anyone can do it, I think the Justice Brothers can filibuster. So I'm going to take the screen from you, Tim.
Wait a sec, Matt. What was he trying to say about us right there?
I'm not sure. I checked out for like 5 seconds.
He said if anybody can filibuster, it's Matt and Tim. So,
I mean, and Matt a soapbox.
There's a reason that you and I do most of the halftime report.
Yeah.
All right, guys.
It's that company.
Today's game is kind of fun. It's kind of simple. I didn't go difficult because I mean, if the logo game taught us anything, so I had to be easy.
And hey, I want our team to play with us.
Yes, absolutely.
Hey, so Team Tackle, halftime crew. Once you know the name, pop it into the sim. Let's see who wins in the chat the same way Tim and I go.
Sounds good. Now I have it set up to where it's going to, the hints are going to come in every 6 seconds. So I'm not actually clicking them in. They're just going to happen. So that timer is going to be consistent. I got 6 companies. So hopefully we don't tie. We'll see which of the Justice Brothers can come up victorious today. You boys ready?
I'm telling you, I'm not rocking on 100%.
All right, let's see how it goes. These are all S&P 500 companies. Okay. And I went with, some ones that we should all know. I didn't go like deep down into the dirt of the S&P.
Noah's somehow going to win in chat again.
All right, boys, y'all ready?
Yeah. Okay.
Let's do this. Let me click through and first company.
Okay. American Airlines, Delta,
United,
JetBlue,
Alaskan.
I thought you said big S&P companies.
Hey, I almost did the market cap on that one.
Cap nonsense. Give some Russell 2000 to start.
Dude, I like Alaskan Air, by the way.
Alaskan Air is good.
Alaskan, they're a good company. They do a good job.
Earl got it.
Earl got it. All right, next one.
ExxonMobil. It better not be
American Express.
Is it GE? Coca-Cola.
There it is.
There we go.
I'm gonna say, come on.
Who got it? Got it?
Paul got it. Paul got it.
Paul got it. Good job, Paul.
All right. Let's see what we got here. So Tim's got one.
Mm-hmm. Facebook.
one might have been a little bit more difficult than I thought.
Oh, Hilton Hotels.
Okay, there you go. That's a dead giveaway with that
Yeah.
last.
Hilton's
Obviously.
IPO in 13.
I didn't know that.
Yeah.
I thought they've been around for a lot
I
longer than
thought they've
that.
been around forever.
Yeah,
Yeah, when I found that, I was like, oh, that's a fun fact.
that's awesome. That's why I love the quiz game. Yeah.
I had no clue.
Yeah. Yeah.
That's a fun fact. So, all right.
How are those even supposed to help us? Like
Oh,
literally.
come on. Some of them are clever. Some of them are just facts.
Apple. I don't know.
That one's a little bit
Adobe.
more difficult. That one was a little bit more difficult. They make microprocessing chips.
A
AMD,
lot of people do.
Micron.
Micron.
Intel's a good guess.
This is ridiculous.
Oh, come on.
This is ridiculous. I
Oh,
swear Cody comes into these with one philosophy. I'm getting my revenge.
mhm.
Okay. Okay.
Ooh, interesting. Ohio-based company.
That's a
Johnson and
dead giveaway.
Johnson and Johnson.
Good guess, but no. PG. Keith got it in the chat.
Oh, PD. Good job,
Procter-
Keith.
Procter
job,
and
Keith.
Gamble. Yeah, if you haven't used the Procter and Gamble product today, you need to. Go brush your teeth. Go wash your
I
hair.
figured it was like showering or something at that point. Even I got that hint.
Okay, 13-year-old company.
Which is 06.
Yeah. Twitter.
I was gonna go. The pound sign.
Yeah,
Hashtag.
hashtag. Yeah, it's Twitter.
It's Twitter.
Oh, okay.
What does the
I was
president
thinking,
do? when he
like,
gets bored?
No,
seriously,
I nailed it.
Cody, this is what I was thinking when you said pound. I was thinking British pound. I'm like, oh,
No,
Yeah.
that last
Cody, you're
one.
fired from the games.
What does the president do when he gets bored?
Yeah, that was okay. Well,
By the way, I think, are we done?
Wait. Are we done?
You got
yeah,
more?
that's,
We're done.
I think I just won.
Tim got to win.
Tim did it.
See, when
Tim got
Mark's not hosting, when Mark's not manipulating the results of the game, I actually have a fair shot.
Oh, is that?
Yeah.
Tim, listen.
Yeah.
Oh,
All right,
what
I
is
did-
it?
I did-
Shines
I
on
did-
the dog's ass. Some dead clocks right
Even
twice.
Yeah, even the sun will shine on a dog's ass every now and then, and even a broken clock is right twice a day. Those are correct. By the way, whenever the whole timeout, hold on.
Golf clap.
Thank you.
You got 1 out of 6. I got 0. You're amazing. I'm terrible.
He got 3. Tim got 3.
I played, Matt was a great high school basketball player. Actually, when he was playing high school basketball, he broke the state record in assists in one game, Cody. A lot of people, he would never tell that about himself, so I'll tell it right now. The reason I bring that up is because I was not a great high school basketball player, and I had a coach who was very critical of me quite often. I think the only reason why I made the team is because I was kind of like a tough. I would go in and
You're
foul.
scrapping. You're
too, and-
scrapping.
I
Tim's the
played
guy
my
that
whole.
He would be put in for 5 minutes and get 5 fouls. Like,
I did foul out. I think I set a record on how fast I fouled out of a game once playing in Richfield High School. But the reason I bring this up is whenever I would shoot, and there was one time I even made a shot and my coach was yelling at me. And at halftime, I said, Coach, I made the shot. I was trying to defend myself. He's like, Tim, don't shoot. I'm like, Coach, I made that shot. He says, even the sun shines on a dog's ass every now and then. So I had no confidence in my shot ever, Matt, probably for good reason.
by the way, that same coach told me not to shoot too.
Yeah, he did not want the point guard shooting the ball. You kick it to the wing on the corner, and that's what you did.
Very traditional. Your job is to set someone else up.
Yeah, that's right. That's it, guys. Fed meeting here in 33 minutes. Great job here today, Matt. Great job, Cody. I enjoyed the game only because I won it. I actually think I probably did not win it. If you check the chat in the comments, those guys in Team Tackle, they were hitting those comments a lot quicker than I was. But if you're out there and you're watching the show, just real quick, couple of notes. Number one, Tackle 25 tonight. If you're a pro member, come and join us. Coach Greg Holmes will be doing the webinar. David Kaiser will be hosting. Should be a lot of fun. Obviously, cover calls are on our mind right now in a theta-driven market. It's a good time for that conversation. If you are watching the channel for the first time, subscribe, click the bell, join us every day. We do this live every day at 12:30 Eastern as a daily show whenever the markets are open. Obviously not on the weekends, but we do it whenever markets are open. And Cody, can you drop the 15-day trial always in the chat? I know you always do, I believe.
Absolutely, I can.
Yep.
If I don't lose internet again.
Yep. And if you are not a member of Tackle Trading, I'm going to give you a directive right now. Give it a try. You know, you've got 15 days on us to see what we do on the back end, to see what we do in our webinars and our content and our lounges and with our shows, Matt. It's pretty easy.
Just even, you know, we include the step system in that subscription right now. We're going to make some modifications to that at the first of the year. Everybody from Tackle Trading that's already a pro member will be grandfathered into everything. That's how we do everything. But in terms of that, I mean, take advantage of that step system. It's an 8-hour course, and I challenge anybody to find a better 8-hour course on teaching somebody how to swing trade than the step system course. I'm very proud of that course.
Yeah, for sure. And you should be. All right, guys, great show today. We will be back tomorrow, and we're out.